Joining me now for more on this is Christine Short. She's the head of research at Wall Street Horizon. Christine, welcome to the show.
Yeah, thanks so much for having me.
All right, so as I mentioned, after the bell today, Nike is releasing its earnings. What do you expect?
It's funny because we always think of the quarterly earnings season as really kicking off with the banks, and we will get that in a couple weeks' time, but Nike's always out of the gate pretty early, right? So tonight, I think Nike's always kind of seen as this bellwether because they report early, a bellwether for other consumer and retail names that are yet to come. And today, investors are going to be all about those tariffs. We heard in their last their fiscal fourth quarter report, that the hit was going to be about $1 billion because of tariff costs, but they had some ways to fully mitigate those costs. So we're going to hear about how that's going. One of the ways was to increase prices, and we saw some universal price increases over the summer, $5 to $10 on footwear, $2 to $10 on apparel, but their surgical price increases, and that's what they called it, are coming this fall. We're in the fall now. How are those going? How are you mitigating costs? They were going to move suppliers. They were going to negotiate with partners and suppliers, and then, of course, increase costs. So again, this is going to be a bellwether for other consumer, related names to come to see how is Nike dealing with the tariff costs.
And do you think we're going to start to see that passed on to consumers? I recently paid for coffee the other day, and I paid a tariff surcharge. So I think it's safe to say that perhaps it's starting.
Yeah, it's funny that you say that. A colleague of mine was just saying he had to send his coffee machine out to get work done in Italy, and when it came back, he had to pay a $50 tariff on it. And so we are starting to see this. Nike has said we will be raising costs. Walmart, just look at the names in the retailers. Everyone has said we're going to try to price protect, especially those discounters like a Walmart. But some of these are likely going to creep in, and we know the Fed is really eagle-eye zoned in on tariff inflation. It's taken a little bit of time to work itself out, so we haven't seen the full impact, but certainly Nike listed it as one of the ways they were going to mitigate their costs. And, beyond that, Nike, prior to tariffs, they had some of their own issues company-wise, really stemming from COVID. Their supply chain has taken a while to work out, inventory challenges. They've had excess inventory that they've tried to filter out. We're now 1 year under the leadership of Elliott Hill, the new CEO that took the helm back in October. And I think analysts are really feeling positive about the changes he's brought with the Win Now strategy. So we're going to hear more about how that's going, their innovation, which has been lagging for some time, in competition in China, where they used to get a big chunk of revenues, but now they're losing market share to some domestic apparel and sports providers in China.
And speaking of Nike CEO Elliott Hill, what do you think investors will be looking for from him as it pertains to guidance?
I think they want to hear the main pillars of Win Now, how they're going. The first was to focus on these major sporting events. We've got the World Cup coming up next year in 2026, arguably the largest global sporting event, and this is going to be a marketing bonanza for Nike and for other names in the space. So what are they planning for that? Partnerships, Nike Skim just came out. They're looking to compete in the athleisure space with the likes of Lululemon. How is something like that going? And then they had a city and a country focus. Beijing, Shanghai, two of the big cities they're focused on, as well as New York and LA in the US, and London. And so how are those initiatives working out? Also, they were looking at other suppliers. They were trying to get imports from China from 16% to 10%. So investors will certainly be looking for updates on all of these pillars of the Win Now strategy.
All right, in earnings season, it'll be ramping up again in mid-October. What do you think investors will be looking for?
Well, again, it will be likely about tariffs for those consumer-facing companies, but overall earnings are expected to grow. For the S&P 500, EPS growth is expected to hit almost 8%. The interesting thing about that is it would be the 9th consecutive quarter of growth, but it's also ramped up over the quarter, and usually analysts ratchet their estimates back a little bit. So in the beginning of Q3, July 1st, expectations were for 7.2%, and those have only gone up. So that's actually a little bit rare and a positive thing. Revenues also are expected to come in at 6.3%. Back at the beginning of the quarter is 4.8%, driven by some main sectors, the ones you would expect: tech, consumer services, communication services, and financials. And those are the names we get out of the gate. We start with financials, and then we get into some of those big tech names. So investors are going to be looking for the performance on those sectors.
And what are some of the biggest themes that you think will develop in this next earnings season?
Well, it's always about guidance, right? Because the last quarter is backwards looking, and we want to start seeing what the outlook looks for 2026. What is the tariff impact going to be? We've just heard about these recent tariffs on furniture, so we're going to be looking to hear from the Wayfarers and from Williams-Sonoma and some of those, specific names that potentially could see tariffs coming up. But we're going to want to look at the 2026 outlook and how these companies feel they can continue to grow, because it's been a record year, and analysts think that 2026 the growth continues. So how far can that go?
Anything under the radar in the last 30 seconds that you're following that you think might become big news?
I think most of these things are priced in, but I'm going to want to watch some of these retail names to see how we think the Fed might be reacting. The government shutdown obviously is a big focus for this week. We are expecting jobs reports on Friday, but we might not get that. Usually government shutdowns are more of a blip on the market radar, but if we see some of these federal furloughs turn into permanent job, like President Trump has said, some of these jobs might be eliminated. What does that do to the softening labor market? So they could have longer term consequences. So we're certainly going to be looking for that this week.
All right, Christine Short, Head of Research at Wall Street Horizon. Thank you so much for joining us at the New York Stock Exchange.
Thank you for having me.